Welcome back to Alpha Recap, your after-hours take on the day's biggest market stories. We're coming to you after the close, and as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from today. Big tech action, legal headlines in smaller names, and even a union rally that caught headlines. Let's dive in.
So, what really stands out here is the pace of the sell-off in Nvidia. It paced today's tape with a pretty sharp move down, about 4.5%, finishing near $199.57 on roughly 223 million shares. That was the headline number everyone was watching. Right, and the size of that volume matters. Analysts note the combination of a meaningful price drop with big participation raises near-term volatility for growth-heavy allocations. Profit-taking or rotation, maybe both.
Yeah, that tracks.
And it wasn't just Nvidia. Today had heavy turnover across the board. Intel finished down just under 0.3%, around $94.48, but on about 157 million shares. Heavy volume in a tight range. Traders were clearly debating direction.
Right. Amazon actually finished the day up modestly, about 0.75%, near $265.06 on about 100 million shares. So liquidity was high there, but price action was muted.
And then you had Nokia rallying intraday, up about 3.2% to roughly $12.92 on about 135 million shares. Honestly, I was a bit surprised by that one.
Yeah, same. There wasn't a clear fundamental pushed out with that move. It felt momentum-driven.
Exactly. So the market picture. Heavy volume in some megacaps, amplified moves, and that increases execution risk for big orders. Data suggests institutions were actively repositioning by the close.
Short reaction?
Okay, shifting gears. The other big theme today was legal and regulatory risk, especially for smaller, higher beta names. The Sportradar episode is front and center here.
Sportradar was in the headlines after short research allegations from firms like Muddy Waters and Callisto Research. That earlier report pushed the stock down about 22% back on April 22nd, and now there's a Hagens-Berman notice. Analysts point out that this elevates both legal and disclosure risk for the company and shareholders.
Which is important because when law firms and short researchers shine a spotlight on a name, it can trigger follow-on lawsuits, regulatory inquiries, or funding stress. Those outcomes can materially affect cash flow and access to capital. So this isn't just a headline, it's a potential balance sheet event.
Short reaction? Right.
Two other names to flag on the legal front. EOS Energy got a securities fraud lead plaintiff solicitation from a law firm, and New Era Energy and Digital had a class action claim reminder with a June 1st, 2026 deadline. Analysts note a pattern. Plaintiff firm notices and activist reports often precede heightened volatility and additional disclosures.
Hold on, say that again?
Sure. The pattern is that short reports and law firm solicitations can start a multi-week process. Immediate sell-offs, followed by potential suits, regulatory follow-ups, and then disclosure-driven volatility. Portfolio managers with concentrated positions should model scenario outcomes for revenue, reputation, and access to capital.
Got it. So think of those figures and deadlines as inputs for stress tests, not as definitive outcomes.
Exactly. Treat them as scenario inputs. Now, another operational theme cropped up: labor and cybersecurity risk. The Teamsters held a high-profile rally outside Home Depot's headquarters in Atlanta, and that drew attention to possible margin pressure if negotiations escalate.
That's right. Even a localized workplace action can change investor assumptions around wages or staffing, and analysts may rework margin forecasts before any top-line impact shows up.
And on cybersecurity, Stryker's name popped up after an analyst cited exposure concerns and cut the price target by about 6.5%. The share reaction was roughly 3.3% in the near term. The takeaway is, analysts are increasingly pricing cyber risk into near-term guidance for medtech names.
So operational risks, Labor strikes, cyber incidents can show up first as margin pressure, then later in guidance or earnings. That's the sequence investors should be thinking about.
Right, and to add to that, these are the kinds of idiosyncratic shocks analysts fold into real options or stress test models.
Quick reactions. Yeah, absolutely.
Healthcare had its own set of noise and catalysts. Viatris announced 6 abstracts on an investigational weekly contraceptive patch, including positive Phase 3 reads, to be presented at ACOG. Multiple abstracts and favorable Phase 3 data are discrete catalysts that could influence adoption and commercial forecasts if regulatory pathways proceed as expected.
And don't forget the Bone Health and Osteoporosis Foundation launch of Osteoporosis Awareness and Prevention Month. That tends to steer attention and sometimes marketing or research-driven announcements through May. So healthcare moves are often idiosyncratic. Data readouts and seasonal awareness can matter more than broad market swings.
2 quick legal nudges to repeat. EOS Energy solicitation for lead plaintiff status. Watch that timeline. And New Era Energy and Digital's class action deadline on June 1st, 2026. Also, look for full poster details from Viatris at ACOG after the abstracts go live.
Short reaction.
Let's step back and pull out the cross-cutting patterns we saw today. 1. Elevated market participation combined with headline sensitivity. Heavy volume in mega caps plus legal headlines in small caps favors headline-driven volatility. 2. Litigation and short report risk remains concentrated in smaller, higher beta names. Think big drawdowns and protracted uncertainty.
3. Operational risk is back on the front page. Labor and cybersecurity stories are being priced as real margin risks. And 4. Healthcare remains bifurcated. Clinical readouts as discrete inflection points, while awareness campaigns create seasonal attention rather than immediate financial signals.
Analysts also flagged that many of the briefs included raw percentage inputs that desks can plug into valuation and stress models. Important point. Those figures are model-ready inputs, not definitive signals about a company's future.
Quick snapshots for traders. Amazon finished the day up about 0.75% to roughly $265.06 on about 100 million shares. Intel was down about 0.3% to around $94.48 on about 157 million shares. Nokia rallied roughly 3.2% to about $12.92 on about 135 million shares.
And in terms of what to watch when markets reopen, Nvidia. Watch whether buyers re-enter to stabilize price after today's roughly 4.5% decline. And look at intraday support levels and options implied skew for signs of demand for downside protection.
Sportradar is another big one. Any company response, regulatory filings, or follow-on research pieces will be critical. Legal filings could reshape valuation quickly.
Also, keep tabs on Home Depot. Union statements, negotiation updates, and any company commentary. Wage and staffing disclosures in future quarterly updates could reflect these pressures. And for healthcare, watch Viatris for full abstract releases tied to ACOG and any commentary around regulatory timelines or commercialization plans.
And on cyber, keep an eye on Stryker and any peer disclosures. Cybersecurity risk is increasingly being priced into near-term guidance.
Final takeaways before we sign off. 1. Heavy volume in large caps amplified today's moves, so execution and participation matter. 2. Legal and short report risk can trigger outsized volatility in small and mid caps, and those events often unfold over weeks. 3. Operational shocks like labor and cyber tend to show up first as margin pressure, so stress test those assumptions. 4. In healthcare, watch data readouts and regulatory sequencing. Many moves are idiosyncratic.
Quick reaction? Right.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
And a reminder, this digest is for informational purposes only. Analysts' note and data suggest trends. This is not investment advice, and we're not recommending any specific actions.
We'll be back after the next close with more recap and context. Until then, keep an eye on the headlines and your scenario models. Thanks for joining Alpha Recap.
See you next time.